Peace, love, and light, family. Peace, love, and light. Welcome, everyone. Whether you are here to protect your family, grow your wealth, or finally understand what your financial advisor never fully explained, you're in the right place. Today, we're going to decode the mysteries behind term life insurance, whole life insurance, and a powerful strategy called the infinite banking concept. Have any of you guys ever heard of the infinite banking concept before? If not, you're going to learn today. So the IBC, which is infinite banking concept, is a method used by banks, the wealthy, and the savvy entrepreneurs to build lasting wealth. So guys, get ready to never look at insurance the same way again. Okay. Understanding life insurance. Now we're going to the basics, family. Term life insurance provides coverage for a specific period. So it could be 10, 20, or 30 years. If you pass away during that term, your beneficiaries receive a death benefit. If not, the policy expires. So let's be mindful of that. But the pros of term life, it's affordable premiums, okay? Lower costs than whole life. Simple to understand, straightforward protection, high coverage for low costs. You can insure a large amount for a modest monthly payment, okay? Cons of term life, temporary coverage. It expires, often leaving people uninsured later in life. You can't borrow against it or use it as an investment. Basically, you use it or lose it. If you outlive the term, the insurance ends with no payout. So I'm not saying that the term life is bad, but if you outlive it, which is good, all that money that you paid is not going to you or your foes. It's going to the insurance company. So just be mindful of that. Now, whole life insurance protection plus wealth growth. Basically, whole life insurance provides lifelong coverage and includes a cash value component that grows over time. A portion of your premium goes into the cash value, which earns guaranteed interest and dividends if it's a participating policy. Okay. So the pros of whole life basically is lifelong coverage guaranteed to pay out as long as premiums are paid. Cash value accumulation grows tax deferred and can be borrowed against. Stable returns offers guaranteed growth plus potential dividends. Okay. Asset protection. In many states, your cash value is protected from creditors, and also legacy planning. You can leave a tax-free inheritance. Okay, and it's basically what the Rockefellers, the Rothschilds, the Bilderbergs, the whole nine. This is what they do. They all have a whole life insurance policy. Now, the cons of a whole life is basically as higher premiums, significantly more expensive than term. Okay, slow growth early on, and it takes time to build meaningful cash value. Complex structure can be confusing without proper education, and this is why you hear. This is why you hear on Liquid Fortune. We're gonna give you the best 401. So the infinite banking concept, how to become your own bank. Well, the core idea is instead of putting your money in someone else's bank and borrow from them, what if you can become the bank? Something to think about now. That's the infinite banking concept. Made popular by Nelson Nash, it uses a specially designed whole life insurance policy as a personal bank. Okay. So how does infinite banking works? Well, step one, start a high cash value whole life policy. This is not a standard whole life policy, okay? It's engineered for maximum cash value and minimum death benefit to supercharge growth. Set it up with a mutual life insurance company that pays dividends. Step two, fund the policy premiums. Like I like to say deposits, but premiums, you fund the premiums, right? You overfund the policy using a PUA, which is a paid up addiction rider. And this accelerates your cash value growth in the early years. The more you contribute, the more your bank grows. Step three, build cash value. Your policy earns guaranteed interest, and if it's a participating policy, tax-free dividends. Okay. This is your liquidity pool. It's compounding uninterrupted, guys. You hear me? Now, step four, borrow from your bank. So say if you need $20,000 to invest in real estate or start your small business or big business, borrow against your cash value. You can do that and not from it. The cash value continues to grow as if the money was never withdrawn. You repay the loan on terms with interest that goes back to your bank. Step five, recycle money. Use borrowed funds to buy cash flowing assets. Like I said, we got real estate, businesses. So you pay yourself back with profit from those investments. You repeat. This is the infinite cycle of velocity, family. Why this works? The same strategy banks use. Banks store billions in bank-owned life insurance. They call it BOLI. Okay. And it's safe because it's tax advantage and earns predictable returns. You're simply replicating this model on a personal level. So the legal and tax advantages of IBC, tax laws that makes IBC so powerful. Well, it's tax deferred growth. Cash value grows without annual taxation. It's tax free loans. Borrow against your policy with no tax event. Since you're borrowing, not withdrawing, it's not income. You hear that? Tax-free death benefit. Your heirs receive the benefit income tax-free. MAC, which means modified endowment contract. And the rules are basically, the policies must be structured to avoid MAC status. If done right, your withdrawal/loans retain their tax advantage status. So basically with the MAC, you don't want to pass the MAC limit. If so, you will get red flagged by the IRS, and they're gonna get you because they're gonna think or see that you done turned this insurance policy into an investment, and them boys want their money. You feel me? And number five is asset protection. In many states, whole life policies are protected from lawsuits of creditors. Be mindful of that. So for them folk that's on child support or whatnot, yeah, I need to take heed. And also, I educate. I'm big on educating parents on knowing their parental rights. And if anybody is interested on knowing your parental rights and you going through child support or whatnot, drop below in the comment box, Resolute Fathers. You put that in the comment box below. I'll send you some information. You know what I'm saying? And y'all can get that. Y'all can get that 401 straight up. So let's say you overfund a policy with $25,000 a year for 5 years. By year 6, you build $120,000 in cash value. You borrow $50,000 to put into a rental property. The property cash flows $800 a month. You repay your policy loan using rent income. Meanwhile, your cash value never stops compounding. It keeps growing as if the money was never taken out. That's what banks do. That's what the wealthy people do. And since you know this game, you could do it too, family. Straight hustle. Now, term life. I'm summing this thing all up now. Term life is the cheapest but temporary, okay? Whole life is more expensive but builds cash value. IBC, leverage whole life to build wealth tax-free and safely. So if you do that, you can control your capital. You can create your own loan system. You can build a family legacy like the Rockefellers, Rothschilds, and the list goes on. You can bypass traditional banks, and you can also grow wealth predictably. Okay. So call to action. Basically what you can do next is get educated, people. Don't just buy a policy, get one structured properly. And this is why you tuned in to Liquid Fortune. And I will give you that for 1-1. Okay. Talk to an IBC specialist. Hey guys, it's me. Work with someone who knows how to design policies for cash value, not just for death benefit. Okay. And I am licensed right now in Georgia. So anybody in Georgia, y'all want to get this thing set up or want more information, drop below in the comment box. I am interested. That what you put down there, and I would definitely give you that 411. You give me your information, and we can get this thing started. And for those, and I will be, best believe, soon in all the 50 states. And also, this for everybody right here. I'm working on some course classes that I'll be having out, and I'm also working on a book. I'm trying to decide if it should be an ebook or hard copy. I might do both, but you know what I'm saying? It's basically is we'll be talking about, you know, giving y'all the juice or the secrets to becoming financially free. You know what I'm saying? So it's some good information. So start small, grow fast. Even $200 a month can begin your journey. You know what I'm saying? Now, if you balling like that, you want to put 20,000, 15,000, 50,000. I mean, that's you, but you can start small. You know what I'm saying? So it's no biggie. Become the bank, start the cycle. Now, remember this, family. Banks make money on the spread. Now you can. You are already funding someone else's bank. Why not fund your own? Don't that make sense though? It's not about dying, it's about using your life insurance while you are alive. Okay? Take this 411 with you, family. Peace, love, and light. Always stay financially educated, illuminated, and elevated. Peace.